Sana, tell me, what's the big update this week that's taken place?
Yeah, so the Bank of England base rate was held at 3.75. I guess this was all round quite positive. I think it just shows that there's a lot of uncertainty there, so they can't quite tell at the moment what's the future has got to hold, especially with everything going on in the Middle East. But it was quite positive. I saw that inflation actually dipped slightly. But at this point, it's just so hard to tell that I think we kind of need to wait a bit longer. And it is the 5th time it's been held this year. But there is just still so much uncertainty with what's going on overseas.
So what does this mean for mortgage rates and say first-time buyers? How will this have an effect on rates as a whole?
At the moment, I'd say there's no real impact with the announcement yesterday. However, because of all the global uncertainty, fixed rates are actually going up. So they're not directly affected by the base rate. We have seen increases the last couple of weeks because of the uncertainty. And again, we just don't know how long this will go on for. And I think that's why it was held yesterday. But no real direct impact at the moment. And I think it's relatively positive.
So if you were sort of advising one of your clients today, would you be pushing them towards a variable or a fixed rate? What would be your advice if someone came to you asking you, what should I do?
I'd say depending on their circumstances, a lot of people are utilising trackers at the moment to review the rates, fixing at the moment on these rates as they are slightly higher. People that are a bit more financially astute might want to just keep their options open. Anyone that's a bit more cautious, though, I would definitely recommend a fixed, just so then, they know where they stand. They've got that security, that safety net. But it's a bit of a mixed bag at the moment. A lot of people doing 2 years because I guess they think, rates very volatile. They think they might come down. But with a 5-year, by the time that comes around, new government will be in place. Hopefully it'll be a bit more settled. And there's not much in it at the moment. They're both very similar. It just kind of depends on what they want out of that product.
Yeah, and I suppose the other big question at the moment is deposits. And what's the situation with deposits in regards to how much would a buyer need, specifically maybe a first-time buyer, and what sort of options have they got at the moment?
We'd always say to aim for about 10%, but, you can put down 5%. We have seen so many more schemes this year, especially loads of lenders, Halifax and Skipton, doing their 0% deposit. Halifax have just launched their £5,000 deposit. It is a really, really positive move for first-time buyers especially, and it's really helping people, especially renters that, can't save each month because of the cost of renting, helping them get on the ladder. So yeah, I'd say as little as nothing now with deposits, obviously just subject to their circumstances.
And is there anything you can do to improve your situation in regards to your credit? Any tips you may have so when people do come and apply or come and see you, they're in the best possible position to be able to secure the best possible deal?
Yeah, so in terms of credit, making sure they're paying things on time, that's so important. And I think a lot of people do get to the point where they're going to submit an application and then they download their report and they think, oh my gosh, I've got stuff on there I didn't realise. So it's really good, at the early stages, download a copy of your credit report, go through it, make sure you've got nothing on there that you didn't know about. And if you do, dispute it. But yeah, just keeping up to date with payments. I think credit cards as well, keeping below the 75% threshold, limiting, sitting in an overdraft and things like that. And I think getting on the electoral roll as well is something that people don't realise makes such a big difference when the lenders are trying to find you when we come to do the searches.
And what about when your mortgage is coming to an end? And so you've already got a mortgage secured and it's coming to an end. What's the best time to strike in regards to getting a new mortgage or speaking to someone? What do you advise when that period's coming? So you're coming to the end of a 2 or a 5-year fixed. What's your advice on that front? We
tend to reach out to our clients 6 months before, and a lot of lenders will directly reach out to their clients about 4 to 6 months before as well. We say to do this just to review your circumstances. If you're looking to change anything about what you've got on the borrowing, anything with the mortgage, it just gives you ample amount of time to do this. So if you have got a rate coming to an end, we would strongly recommend getting in touch as soon as possible just to review this. A lot of people think, just tapping into their emails and fixing with the lender that they're already with is the best thing. But actually, we will review circumstances for the whole of the market and your existing rate. And locking in 6 months before now with remortgages is still doable. I know with product transfers, they did reduce the window, but again, with rate increases at the moment, they may end up extending this. We don't know. But I think anyone that's got a fixed rate ending now, get in touch with an advisor, speak to someone, because, they are going up and we don't know how long this is going to be for. We also will secure that rate and rate review. So if they start to go down again, you can just take advantage of this right up until it ends.
Yeah, and if someone does want some advice, what's the best way to get in contact? Obviously, they can call you. Can they come meet you in your offices in Maidenhead, or do you do Zoom calls? Do you meet them at home? What's the process for someone to really get the ball rolling, especially if they've never spoken to a broker before?
Get in contact. We're only Maidenhead, so people can come in, have appointments in the office if Teams calls are more appropriate. I mean, we've got clients all over the country, and sometimes coming into Maidenhead is just not possible. So we'll do it over telephone, Zoom. Some of us also go out to clients as well, especially if it's not possible to come in. But definitely reach out over social media, email, even just giving us a call. We're more than happy to kind of have anything to suit their circumstances, and we'd have a chat and dedicate some time to review it. We do charge fees, but our fees aren't payable until we get mortgage offers, which is great because then, we can meet, do the research, and once we know that we can actually secure the mortgage, you're not then binded to paying a fee.
The benefit is you can lock in. If the rates come down, you can lock into a new product and you're not stuck with the initial mortgage. So you've got a bit of flexibility there, depending on how rates are moving, which is another thing that gives people maybe a bit of peace of mind.
Definitely. So our approach at the moment, especially with a lot of our existing clients that are remortgaging at the moment, we will tell them to lock in as soon as they can. And the beauty of that is, they lock in, they're protected against any further increases. What that then means is we will review it. So say, you've got 6 months until that deal ends. We've got a system in place, Mortgage Metrics, that actually alerts us of the reductions. So we're the first people to know. And that way you get peace of mind that you're constantly going to be able to take advantage of these reductions. And if it goes up, you don't have to worry because you've secured something.
And the $1 million question I always get asked is, when's it? Is it the right time to buy now? Is it the right time to sell now? My view on that is you can't beat the markets. It's the right time when the time's right for you. Sometimes when rates are low, well, mostly when rates are low, prices will be higher. When rates are higher, prices will be lower. So, there's always a silver lining, and I think you can overthink these things. And for me, it's a question of, things align, your head, your heart say, let's go for it. And then financially it crunches, it all comes together. So that question, I think, is actually down to the individual. But I'll ask it to you, when's the right time to buy?
I completely agree with what you're saying. So I think now is a good time. And I think like what we see, especially in areas we're based, we have quite a stable house market. And like you said, when rates are doing one thing, house prices are doing another. It is just down to circumstances. In these kind of areas, I think we're always going to see a demand for people to come over for transport links, schools, people coming out of London. We've got Heathrow around the corner. I think it's always a good time. And like you said, it's just down to what you need at that point in time. If you've got the money there and, you are renting and you feel that you're in a situation where you've got some deposit, you want to get out of home, you want to get on the ladder. It's just down to what you need out of that, I think.
Yeah, well, I think at the moment, I don't think anyone would disagree. We're in a buyer's market at the moment. So certainly there's more supply, maybe less demand. But then, if it in the future, one day maybe reverts to a seller's market, then, the tables turn and the cards lay with the sellers, and you have the bidding wars that we had in previous years and people queuing up and sealed bids. And so it's a totally different environment when the market is like that. But certainly I think I agree with that. And, it's down to circumstances, and that's really important.